The couch investing portfolio has had a horrible week last week. It was down 2.51% compared to the S&P 500, which was up 0.83%. Since the start of this challenge, the S&P 500 is up 4.85%, while the couch investing portfolio is down 3.17%. Now, of course, with the current holdings, you might understand why it is still volatile. With Tesla being number one in the portfolio, we know Tesla is quite volatile. SoFi being number three, quite volatile as well. Palantir reported last week, we've covered that throughout the last couple of days. It was volatile, it was down quite a lot. I did make some changes with regards to the portfolio. So for example, I sold all of my position of Funko, was purely for a short-term trade. So I sold for a 16.75% gain. I also increased my position in SoFi by 16.67% and increased the Palantir position by 20%. I completely sold out of Robinhood. It was an earnings play. Seeing how the market was reacting throughout the week, I took my gains, a gain of 8.36%. I also added 33% more shares to my Intel position. It still is quite a small position. It sits at the number 10 position of the portfolio. If we exclude the cash, we still have some cash to spend, whether on existing positions or on short-term trades. We know last week we talked about trades with regards to Palantir, trades with regards to Robinhood. Of course, the trade with regards to Palantir did not work out. The trade with regards to Robinhood worked out a little bit. That's also because, well, that trade started a bit earlier and the stock ran up a little bit before the earnings release. Plus, I also did a trade with regards to Celsius. We've covered Celsius earnings report on the channel. With regards to Celsius, stock was down, but then went back up. Took my hit, small hit there. Alright, can't win them all. Hopefully we don't lose them all either. But like I said, I usually don't do these short-term trades, especially not during earnings season, because it's either a hit or a miss. For example, again, I take the example for Palantir. The stock ran up quite a lot before the earnings report. So yes, I would say I should maybe have sold before the earnings release. But then again, I said this was an earnings trade, so we stick with that. With regards to Robinhood, it worked. I mean, 8% gain, fine. I was maybe expecting a bit more, but we'll take what we can get. Usually it works out big or it does not. In this case, it was basically 50-50, but I do not recommend doing this each and every time. Unless you're a professional trader, then of course, who am I to tell you what to do? Now, with regards to the other positions in the portfolio, maybe we should talk a little bit about what's going to happen in the next coming weeks. What's the game plan here? With regards to Google, there was some recent news with regards to Apple and OpenAI, the release of OpenAI's own search engine, let's say, or search engine app, whatnot. That, of course, every time something like that comes out, Google Alphabet is taking a hit since they are the most dominant player in the search market. Every percentage points that gets taken from them is a huge hit for them and a huge gain for whoever takes that percent. Now, we've seen this again and again and again. If the stock does get hit quite significantly, if it goes down again 10, 20% or so, I'll take definitely that opportunity to add a bit more, because as we've seen in the past, essentially nothing changed for Google. It's just a company that becomes bigger and bigger and becomes more and more profitable, and I'll accumulate accordingly. Then with regards to Tesla, we talk about Tesla each and every week on the Tesla Weekly, so I really have nothing to add there. There's going to be a lot of changes in the coming months, that's for sure, and we'll follow that accordingly as well. With regards to PayPal, it's quite a strange stock, right? It's a stock, although I'm up here close to 10% on that position, but overall, good earnings report, good earnings call. We've talked about that. Maybe I'll do a second video on PayPal, again, about my thoughts on how I want to increase that position, because I do still think that risk reward wise, it is one of the better bets now. I know a lot of people think PayPal is dead, it's not worth it, etc., etc. Then of course, you should not invest in that company, but I am a big believer in that huge turnaround. Then another stock that, again, doesn't make much sense is SoFi. SoFi is the number 3 position here. I'm down 5.73% currently, but pretty happy with the allocation right now. With regards to SoFi, it's also something quite weird. The market just does not believe in the success story of SoFi and Anthony Noto. Each and every time it's the same thing. Beat and raise, beat and raise, beat and raise. Although, yes, it's true, it was a bit weaker than expected. The guidance So fine, we'll give them that. But overall, for the long run, do I think that this company is worth more than $7? Yes, I 100% think that it's worth more than $7. Then moving on to some other positions. So I want to talk a little bit about Adobe. Adobe yet to report earnings. Snowflake yet to report earnings as well. Remember, I bought Snowflake after the last earnings report and call. New CEO, in my opinion, sandbag guidance. So I bought some shares. I'm down 5.3%. I still think that when I will sell this, it will be in the green. Whether or not it happens already this quarter remains to be seen. But I fully expect to be green on this position this year, because I do think that the new CEO, the guidance is sandbagged so that he can outperform. Now, when will I sell? Remains to be seen. Could be after the next earnings report and call if the reaction is already pretty positive. And if not, I have no issues keeping those shares in that portfolio. What happens with the cash afterwards gets allocated to some other positions or maybe some newer companies that might or might not enter the portfolio. With regards to Adobe, same thing here. I bought shares because I thought the AI fears were overblown. Yes, I'm down 6.2% here. With Adobe, I do have a bit more patience because I do still think that this company is an outstanding company that will perform quite well for years and years to come, buys back quite a lot of shares as well. And I do think that AI is going to enable them to do much more rather than restrict them or make them lose market share, make them lose profitability, stuff like that. Moving on to Lululemon. This position, like I said, the first 2 times or so we talked about Lululemon, I jumped into the Lululemon a bit too soon, in my opinion. So now I'm down 8% or so. But here, I mean, it's the number 8 position in the portfolio. I'm quite happy with the allocation now because I do still think that maybe there might be some more weakness coming up. Not necessarily. Still, high margin business for the business that they're in. So I'm happy with that. Currently not touching that. We're gonna wait and see what happens in the next earnings report. With regards to Meta, that's a new-ish position that I added to the portfolio. When Meta dropped a little bit, I added after the earnings report. Increased spending, in my opinion, is the right thing to do. Still up right now, 8.14%. I will definitely increase that position in the coming weeks. With regards to Intel, you know my position on Intel. I'm bullish on Intel for the long run. I'm fully aware about the risks still attached to it. There still needs to be quite a lot of execution. Yes, my timing on opening a position with Intel here is quite disastrous. It's down 22% right now, but still a small part of the portfolio, only 3.78%. So yes, I will definitely increase that position in the weeks ahead as well. Then with regards to dLocal will actually report earnings, I believe, this week in the coming days. I'm down 10%, a very, very tiny position right now. With dLocal, just like with some other companies that we're talking about, with earnings, it's pretty simple. Either you want to play the earnings bet, so you're buying before the earnings, or you're shorting before the earnings, or you're playing the options game. That's up to you. But me specifically with dLocal, I know a lot of questions are asked with regards to those types of things, with regards to earnings season. So right now I have a position, it's down 10%. Do I add more before the earnings report, or do I wait until after the earnings report? Now, me personally, right now, I'm down 10%. It's fine, it's a small position. Why will I not be adding before the earnings report? Well, because the last quarter showed us and told us that in the short term, they are willing to take a short-term hit with regards to margins. So maybe this quarter will be another, let's say, disappointing quarter for the market, and the company could get hit a bit more. Now, what happens if that doesn't happen? Then the stock goes up. Then I miss my opportunity to dollar cost average at a lower price, increase my position size, and now I might actually break even. I'm fully aware with that, but when we go up right now, I will get more information. And if that more information cost me, 5 extra percent, 6, 7, maybe 10%, I'm fine with that. This is a company that I expect to hold for a long, long time. Market cap was it $4-5 billion. The market opportunity that they're in is huge. If it's a success, it's probably a multi-bagger. So for me, these types of moments don't really matter. You might say right now, okay, so why don't you buy? Again, if earnings was not going to happen in the next coming days, I would probably add here. But since earnings is coming up in the next coming days, I don't mind waiting. Oh, and by the way, earnings, this is the earnings schedule for the week. StoneCo after hours. Then on Tuesday, we have before the market opens, Alibaba, Home Depot, Sea Limited, Sony. I hope I'll have time to cover Sea Limited and Alibaba before the market opens. I'm not quite sure. If not, it will be later during that day. Then after the close, New Holdings, New Bank. I was a shareholder from $4 to $12 or so. Sold to increase my melee position. I will definitely follow up on that. On Wednesday, we've got before the market opens Monday, which I think is the first time they don't report on Monday. I'm quite disappointed with that. After the market close, we've got Cisco, Grab, and all the rest. I'm not really that familiar, but I do think that dLocal is reporting on that day as well. On Thursday, we've got Walmart, Baidu, JD, John Deere, and Under Armour, Canada Goose, for those of you that are familiar with that expensive stuff. Thursday, after the market close, we've got Take-Two Interactive, Doximity, and all the rest, Globant, maybe, and all the rest I'm non-familiar. And then on Friday, some companies I've never heard of. And I think the week after that, we've got NVIDIA. Now, last company I want to touch on is Rocket Lab. Yes, there still is Apcellera, which I'm down 20% as well. No extra info to give you with regards to that, unless we get an earnings report, which we're going to cover in those weekly episodes. Rocket Lab, I'll also do a separate video on that company, talking about the report, the call, and the recent interview that Vince and Matt did on their channel with the CEO. But right now I'm only down 1.39%. It's a tiny position. These two are basically long-term bets. If they work out, then that tiny position will be quite a big one in the long run. Will I add to those positions? I will more likely add to Rocket Lab than Apcellera in the next coming months because, well, their success, let's say, for Rocket Lab will happen sooner than Apcellera, in my opinion. With regards to Rocket Lab, I'll just touch on a couple of things. So for Q1, they had 4 successful launches. In Q1, I believe the expectations beforehand were 5 or something like that. For Q2, there was already 1 launch that was completed. The launch schedule for Q2 is up to 4 more launches. The Electron manifest for 2024. There are 22 missions sold for 2024, but customer readiness, payload delays, and other factors continue to cause manifest movement. Several customers requested new launch dates in 2025. Now, Electron remains on track for a record number of launches in 2024, so that's great. Of course, the more they can launch, the better it will be for the profitability side of the business. With regards to Neutron, we're going to have to wait a bit longer in 2025. All the other information with regards to Rocket Lab will be put in a separate video for all of you Rocket Lab investors that are interested in that. It's way simpler than putting it fast in these types of videos. So overall, that's about it. Quick recap of the, let's say, activity in that portfolio. Some good, some bad performances there. Overall, I have the cash to now play around a little bit in the coming days and weeks. Remains to be seen what happens if the market gives us some opportunities. I believe there's also a CPI report that gets released in the next coming days. So stay tuned for that, because that will definitely, well, make or break the market. As always, that's just short-term things. For the long run, your companies, you shouldn't really care about what happens. The PPI report, the CPI report, the PCE, Powell this, Powell that. 10, 20 years from now, there's not going to be a Powell that speaks. There's not going to be a CPI report for May of 2024 that might or might not affect your company by 2035. No, it's just BS. But of course, that might just be me. Do share your thoughts in the comment section below. If you enjoy this type of videos, give it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.